Volatility risk is at stake. Hey, I'm Luke Downey going over our latest insights at mapsignals.com. We've got a good one. I know you're thinking about what the election, what could it do to my portfolio? We are going to discuss it right now. But first, what we need to talk about is what's happening in the stock market. The Big Money Index, our most popular proprietary indicator, it was overbought in mid to late October. What we do know is that we don't stay overbought forever and we start to see money coming out of stocks. That's exactly what's been happening in our data as we head into this election. So that is normal, right? Institutions, they're going to step to the sidelines before we know who the victor is. And that is why we need to discuss how elections can influence your portfolio. So here's the first chart. Get your notebooks out. This is great. So if we go back to 1988 and we look at all election voting days, check this out. 1 week to 2 weeks out, you see the S&P is down. You see the NASDAQ is down. The Russell has actually got a little bit of outperformance here, but the bigger picture is 2 months out. S&P is up modestly, NASDAQ is up modestly. And check this out, the Russell 2000 small caps outperform in a big way. So that's the first thing to note is near term, we could get a little bit of jitters depending on what happens with this election. But let's zoom out. Medium term to longer term after the vote, 3 months later, all of these indices are up, healthy gains. But notice the 12-month returns, market-beating gains. Since 1988, the S&P is up 15% on average. A year later, 17.6% for the NASDAQ 100. And again, look at this, Russell 2000 small caps are up on average 20%. So who would have thought that the voting day is a buy signal? But now you're probably wondering what happens if a Democrat wins or a Republican wins? Well, let's go ahead and look at these themes. Look how beautiful these charts are, by the way. So let's look at a Democrat win. This is since 1988. 1 to 2 weeks out, you see all stocks really behave in a negative way. S&P is down 1% or more on the first couple of weeks. NASDAQ doesn't do much better, but check this out on a 1 month basis. You see the NASDAQ is actually up, small caps, Russell 2000 is up. But the bigger picture here is 12 months out. Look where the big outperformance has been. 29% gains for both the NASDAQ and small cap Russell 2000. That's 12 months later after a Democratic win. So keep that on your notepad to see if that's where some of the outperformance is going to be. Now let's talk about the elephant in the room. What if we get a GOP victory? Check this out. Here is where you start to see some bifurcation in the data. So get a Republican win, S&P is modestly lower first couple of weeks, but the NASDAQ 100 really is negative all the way out for 6 months. So I think that is the telling story. But this also includes the dot-com bust of 2000 that really punished NASDAQ stocks. So keep that in mind. Data is definitely skewed to that outlier event. But again, who do we see outperforming? It's the Russell 2000. 1 month later, it's up 4% on average. 12 months later, the only respectable gains come from the Russell 2000. So what does all of this mean? Well, if we take everything together, keep a long-term picture, stocks are generally up 12 months later. And more importantly, Russell 2000, which we have been talking a lot about on this channel, that is where we think some of the biggest opportunity is. And the data supports that. You guys have a great one. Don't focus too much on the election. We are going to be okay. Focus on great outlier stocks. I'll talk to you next time.